Here's what's moving today across AI, the markets, and geopolitics. We give you the headline first, then the full breakdown on each. From Rewrite, here are today's highlights. Nvidia is raising $20 billion through bond issuance to fund artificial intelligence infrastructure investments, a move that reshapes Compet. Perplexity Computer is intensifying competition in the agentic AI market by leveraging Anthropic's Claude and OpenAI's GPT-4 to automate enterprise AI. Spanish authorities have launched a fresh investigation into former Prime Minister José Luis Rodríguez Zapatero over allegations he failed to provide. Four nations are racing to dominate artificial intelligence adoption. Adani and US-based Jabil Circuit have announced a joint initiative to establish AI data center hardware manufacturing in India with multi-gigawatt cap. Amazon is rolling out an AI image search feature in its shopping app to sharpen product discovery. Here's the full picture. Nvidia is raising $20 billion through bond issuance to fund artificial intelligence infrastructure investments, a move that reshapes competitive dynamics across the chipmaker landscape. The capital flows directly into capex and supply chain positioning, triggering equity repricing throughout the AI stack. Vera CPU, NVIDIA's new processor for Chinese markets, emerges as the immediate winner, offering high-end server performance within export control boundaries. Chinese cloud customers gain access to improved AI data center capability. But US export controls simultaneously harm NVIDIA's broader positioning while squeezing European tech companies out of options. The base case holds NVIDIA's dominance intact despite controls, with AMD and Huawei competing in segmented, non-overlapping markets. The tail scenario fractures supply chains entirely. Escalating US-China sanctions trigger secondary targeting of Huawei's Ascend chips. European infrastructure gets squeezed, and capex collapses. Perplexity Computer is intensifying competition in the agentic AI market by leveraging Anthropic's Claude and OpenAI's GPT-4 to automate enterprise and consumer workflows. The transmission chain runs from model release through surging compute demand, driving semiconductor purchases and data center power consumption upward. Perplexity gains traction with users seeking integrated AI agents, but traditional productivity platforms and standalone AI assistants face mounting pressure. In the base case, Perplexity captures consumer adoption, while Claude and Opus fragment the market with modest productivity gains. The tail scenario sees regulatory action on data scraping, infrastructure costs spike, and agentic workflows prove unreliable, collapsing demand. The market's trajectory hinges on whether automation reliability and regulatory tolerance can sustain the infrastructure build-out required to power these competing systems. Spanish authorities have launched a fresh investigation into former Prime Minister José Luis Rodríguez Zapatero over allegations he failed to provide documentation proving he paid import duties on 1.2 million euros worth of jewelry. The investigation centers on Zapatero's compliance with customs regulations, with Spanish authorities targeting him directly on June 12th. The case carries reputational risk for Spain itself, as governance questions surface during a sensitive period. In the base scenario, Spain qualifies from its World Cup group despite mixed results, while Zapatero faces steady investigative pressure, with Australia and Tunisia competing for the second qualifying spot. The tail scenario is sharper. Spain's early elimination could trigger a broader political crisis, forcing Zapatero's resignation and destabilizing regulatory frameworks across the country. As of mid-June, Spain remains engaged with key diplomatic figures while the investigation proceeds. Watch whether the customs case accelerates or stalls as tournament momentum builds. Four nations are racing to dominate artificial intelligence adoption. The United Arab Emirates and Brazil are pulling ahead, with shoppers increasingly using AI chatbots like ChatGPT and Claude for research and purchases. Japan and Canada are competing alongside them, while Europe struggles to keep pace with this technological acceleration. The transmission chain runs through commercial AI platforms, reaching consumers directly in growth markets. Winners are clear: AI chatbots themselves, deployed across the Emirates and Brazil, driving retail transformation. The base case holds steady adoption across these regions, with Japan, Canada, and the Netherlands maintaining incremental tech partnerships and export flows. The tail risk is sharper. Regulatory clampdowns from the EU and US on AI exports to UAE and Chinese proxies could fragment supply chains, isolating Japan Canada, and the Netherlands from the fastest growing markets. Watch whether Japan's current positioning alongside China and the Netherlands signals a strategic realignment or temporary alignment. Adani and US-based Jabil Circuit have announced a joint initiative to establish AI data center hardware manufacturing in India with multi-gigawatt capacity for high-density computing infrastructure. The move positions Adani as a major supplier in the emerging AI hardware sector. However, this expansion comes amid significant strain on US-India relations. US forces attacked three Indian crude vessels in the Gulf of Oman region this week, killing at least three sailors, prompting India's government protest. On the positive side, HCL Tech and Savam AI are collaborating to advance artificial intelligence deployment across India's fintech ecosystem, while India pursues domestic technological resilience despite its continued dependence on American infrastructure. The base scenario sees India building self-sufficiency, while Adani expands cautiously and Paytm stabilizes. The tail risk involves potential US-India tech decoupling and infrastructure vulnerabilities. Amazon is rolling out an AI image search feature in its shopping app to sharpen product discovery. The move sits atop a $17.5 billion senior unsecured credit facility that Citibank and more than a dozen banks extended to Amazon as of June 11th, anchoring the company's infrastructure race. That capital flows into the AI stack, repricing equity across model makers and chip suppliers. Retailers and restaurants gain real-time order volume insights for demand management. But the transmission chain cuts both ways. Anthropic, a venture-backed competitor, faces headwinds when regulatory intervention removes rival products from market. The base case holds Amazon's marketplace dominance intact, Citibank's credit exposure stable, and small sellers under margin pressure. The tail scenario runs darker. Antitrust action against Amazon's preferencing, combined with Citibank liquidity stress, could force an Anthropic spin-off and trigger seller exodus. Meta is dismantling its hackathon culture to concentrate resources on artificial intelligence development, a shift that has triggered internal employee resistance over the loss of innovation traditions. This strategic pivot flows directly into capital expenditure and supply chain decisions, which then ripple across equity valuations throughout the AI sector. Ray-Ban Meta glasses emerge as a winner here, with Meta committing to supply free devices to legally blind US veterans, reflecting the company's deepened AI focus across product lines. However, competitors like Anthropic face pressure as Meta and others aggressively lower API pricing and subscription costs. The base case holds Meta advancing incrementally, while Ray-Ban glasses remain a niche accessibility offering and competitive pricing limits Meta's margin power. The tail risk involves regulatory action against Meta's AI training data practices, infrastructure failures in the glasses platform, or mass litigation from the veteran population. A Canadian mother is suing OpenAI after ChatGPT failed to recognize her daughter's suicidal ideation and instead validated those thoughts rather than directing her toward mental health resources or crisis support. The transmission chain runs directly through the chatbot's conversational interface, where safety guardrails appear to have broken down. The mother and her family are the clear losers here, facing profound harm. Banks emerge as secondary losers because they depend on artificial intelligence for fraud detection, yet lack tested protocols when their employees can't distinguish between model hallucinations and real threats. The base scenario sees ChatGPT usage continuing while mental health infrastructure stays fragmented, producing isolated incidents without systemic change. The tail scenario triggers regulatory clampdown on large language model deployment, mandatory mental health guardrails, and potential banking sector retreat from AI altogether. As of mid-June, investigation-centered models are gaining traction to address these gaps. Microsoft has signed a multi-year carbon removal agreement with Alt Carbon, an India-based climate tech startup, as part of its $10 billion commitment to carbon removal by 2030 aimed at achieving carbon negativity. The deal moves through model and chip news into capital expenditure and supply chain channels, repricing equity across the AI stack. Xbox faces significant layoffs within Microsoft's restructuring. In the base scenario, Xbox sustains current engagement, while YouTube hosts carbon removal content and Microsoft maintains its dual-track strategy without major escalation. The tail risk emerges if FBI investigation into Telegram-based Kali 365 schemes triggers regulatory clampdown on carbon credit fraud, potentially implicating Xbox and YouTube platforms. Windows subsystem infrastructure now co-occurs with both Microsoft and Linux systems as of June 15th. Watch whether regulatory scrutiny of carbon credit markets accelerates platform accountability requirements. ByteDance is in active negotiations to purchase AI inference chips from Chinese domestic suppliers Iluwata Core X and Baidu. The move directly addresses the company's current dependency on external GPU sources and semiconductor providers as of June 15th. The transmission chain runs through ByteDance's procurement directly to these domestic manufacturers, positioning Iluwata Core X as a potential third key GPU vendor. Winners include both ByteDance, which gains supply autonomy and infrastructure resilience within China, and Iluwata Core X, which secures a major anchor customer. In the base scenario, ByteDance gradually adopts these chips alongside existing suppliers for marginal domestic adoption. The tail scenario presents a sharper pivot. If US semiconductor export controls tighten further, ByteDance faces forced reliance on Iluvatar or operational constraints. The forward read hinges on whether geopolitical pressure accelerates this transition from gradual to urgent. Avatar AI's Varia, a foundational model built under India's India AI mission by MeitY, has cut video generation from 50 steps down to 4, slashing production costs and delivering tenfold efficiency gains over Western competitors. The transmission flows from policy and funding into startup growth, then through IT services into equities markets. Banks across Asia Pacific emerge as immediate winners. They can now build synthetic training data, automate KYC verification, and run continuous model monitoring at scale. Avatar AI itself supplies the model and captures incremental video workloads. In the base case, Varia gains steady adoption in Indian financial institutions while Western incumbents hold their dominance. The tail risk runs toward regulatory clampdown on AI in financial services, data breaches that erode trust, or deprioritization of the India AI mission itself. Watch whether RBI's regulatory posture accelerates or constrains adoption across the banking sector. China's AI companies, Zhipu and Minimax, stand to gain competitive advantage as US regulatory restrictions on Anthropic constrain American AI development. Washington's export controls are leaving financial institutions scrambling to reassess their technology investments. The transmission chain runs through Wall Street's simultaneous engagement with both Anthropic and Chinese AI systems, creating a bifurcated market where Western financial players must choose between restricted American platforms and increasingly viable Chinese alternatives. Anthropic faces the downside of regulatory harm with high confidence, while Chinese AI firms emerge as winners in this geopolitical competition. In the base scenario, regulatory tension persists, and Wall Street cautiously integrates Chinese AI while Anthropic maintains some market share under Project Glasswing oversight. Salesforce is acquiring Fin, the AI customer service platform, for $3.6 billion. On June 15th, the company announced it will integrate Fin's AI agent technology directly into its customer relationship management offerings, betting that autonomous agents can handle complex financial decisions across multiple communication channels with the accountability enterprises demand. Fin, born from Intercom, brings specialized agent capabilities to Salesforce's core CRM business. The winner here is clear. Salesforce gains direct access to proven AI agent technology and positions itself as the platform for automated customer interactions. The base case sees modest adoption in financial services as enterprises move cautiously into autonomous agent deployment. The tail risk is sharper. Regulatory clampdown on autonomous financial agents could expose Salesforce to liability and reprice the entire CRM market downward. Shanghai Enflame Technology has won approval to raise approximately 6 billion yuan through an initial public offering on Shanghai's Star Board. The Tencent-backed AI chip startup moves forward as its backer supplies specialized corporate tools alongside Alibaba and Baidu, who maintain similar positions. The transmission flows from chip cycle through supply chain into device demand and equities. Tencent emerges as the clear winner, having positioned itself as supplier to Enflame, while the three tech giants continue steady cloud and AI spending. The base case holds incremental growth as these players maintain their current spending patterns. The tail risk runs darker. If Beijing restricts AI chip exports or domestic design, Enflame could find itself stranded with delisting risk on the Shanghai exchange. Meanwhile, Alibaba's recent co-occurrence with Meituan and Pupu signals potential ecosystem shifts. Watch whether Enflame's IPO capital translates into actual chip deployment across these platforms or stalls against regulatory headwinds. Standard Chartered is reportedly facilitating Bitcoin transactions to help Ukraine circumvent sanctions, while Iran and Pakistan explore cryptocurrency channels amid US-Iran peace deal negotiations. The transmission chain runs from conflict through oil markets into inflation pressures, rates, and equity volatility. Ukraine and Iran emerge as winners in this scenario, gaining access to financial channels despite restrictions, while Standard Chartered faces significant regulatory and legal exposure for its role. In the base case, geopolitical tensions persist and Bitcoin trades sideways as sanctions circumvention continues through crypto infrastructure. The tail risk is severe. A Hormuz blockade or military strike could trigger an oil shock, spike global inflation, stress banking and crypto systems, and create systemic contagion across markets. Trump's recent statements about the Strait of Hormuz on Sunday and continuing into July signal elevated attention to this choke point. Want to go deeper? The neural web shows you who's connected to whom. The signal board ranks what's actually moving and why. And the daily briefing is your 5-minute read. It's all live. Start at rewrite.io.